How are you all? Thanks for coming back. I hope today is great for you. There it is, XRP's future price. A lot of people are going to be shocked. Every out-of-date statement you've seen on the internet is about to go off. You'll know exactly what to do next when you see the data that supports this and what's happening right now. It won't take a long time. There will be a full-on repricing event that will shock the whole market. I hope you're ready. Watch this video carefully because it will shock you. Like always, don't forget to hit the thumbs up button and join. This piece from xrprightnow.com is the first one we'll look at. This site is great for learning about Ripple and XRP because it keeps up with what's really going on. The network action tells you everything you need to know about what's going on inside the ledger. The number of payments didn't just go up, it blew up completely. It went up by 200% in one day, which is very fast. That chart really stands out when you look at it. That's not noise from stores. That's not traders on the weekend making orders at random. That's the volume and speed that show up right before the market figures out it has been wrongly pricing an asset for months. It gets even more interesting now. XRP is still below major moving averages, like a beach ball being pushed underground, even though it is being used more in the real world. That coiled pressure doesn't stay contained forever. Price has never politely caught up over a couple weeks when energy goes up faster than price in the past. It breaks, and it snaps in a way that forces everyone to suddenly pay attention. It's almost like you can feel the stress rising. Even though liquidity, activity, and institutional positions all point to a very different story, the market is acting like nothing is wrong. And what about that break? That's exactly what you see right before a repricing event, a time when the price jumps to where it should have been all along. Everyone acts like they can't see anything. Hey, do you see what's going on? There's nothing strange about this. The smart money can see where all the positions are, but the average person can't tell what they're looking at as they scroll through maps. But the time to wake up is almost here. And when this thing changes prices, it won't be gentle. It will wake up the whole market overnight. Also, get the XRP Millionaire Blueprint if you want to learn how the top 1% place themselves, how they think, and how they plan to become rich and change their lives. There, I break down the way rich people think, work, and the road they take. The link is in the note below that has been pinned. We need to get back to the facts right away because it is crazy this week. This was made by Chad, and the numbers look crazy when you zoom in. Don't forget that there is only one live spot for XRP ETF right now, Tuesday, just 2 days of business. And it has already shocked everyone in the ETF business. Canary Capital bought over 11,926 251 XRP on day 2 alone. This is a lot of XRP compared to the major firms that are about to go live. They got 18 million on the first day. In just 48 hours, this small ETF has gained more than 120 million XRP. And on day 2, the number of shares sold reached over $26 million. No one saw this coming. No one thought the smallest player in the room would walk in and start taking money off the table so quickly on the first day. Think about this with me. The next person to go live is Franklin Templeton. Bitwise is going live, 2 very big names that make Canary look like a small store on the edge of town. Frankie T is in charge of assets worth $1.5 trillion. That's trillion, not billion. They aren't coming with teaspoons when they flip the switch. When they show up, they have vacuums made for businesses. At their current size, Canary is already taking tens of millions of XRP off the market. Franklin Templeton can easily do the same in their first month. Simple, not even blinking. And this is where most people get the numbers wrong. Now, XRP can be bought and sold, but it isn't liquid until big banks with trillions of dollars decide they want to put money into it. After that, the cash goes away. That's when there is no more supply and prices move in a way that people will remember for decades. When demand goes up, supply goes down, and the price doesn't go up, it starts. Which brings us to this, the plan for reducing supply. People have been crazy about this chart all week because it shows what happens when stock is used up faster than it can be replaced. At the start of month 0, there are 31.68 billion XRP in circulation. The model gives out $3.47 by the end of the first month. The third month costs $7.57. In the fifth month, a 19 XRP. By the 8th month, it was over $120. The model predicts that by month 12, over 15,000 XRP will have been earned. In other words, it's not a guarantee. It's a test of how the system works under pressure. It shows how the price changes when institutions eagerly take in supply. But this is important. This proves that XRP is built in a way that allows for violent repricing, not just an idea. Building-wise, when ETFs takes in a lot of stock, the price has to change. You can't leave money on the market and expect prices to stay the same. Now I'll show you the sheet I showed you before, the tool that figures out how an ETF will affect markets over 30 to 60 days. It's been used with 5 ETFs, 10 ETFs, 15 ETFs, and even 20 ETFs, but keep this in mind. Before these estimates can start, at least 5 ETFs must be live. We only have one right now. It's likely that we'll have 5 by the end of November. This means that the 30 to 60-day supply intake window starts in January or February. Let's talk about something that makes everyone so scared. This is the Bitcoin death cross. When people see the title, they immediately think the worst. The people who say bad things won't tell you this, though. After every death cross in the last 10 years, there have been huge protests, each and every one. Check out the chart. Start with a cross and then a rally. Do this 3 times. The death cross is an event that the market uses to start over, clean up, or restart. It's not a sign of bad luck. It's the basis for growth. And when Bitcoin's value rises, money always flows into altcoins, all the time. And when money flows into altcoins, XRP makes that move much bigger because of how it is structured, how useful it is, and now its ETF path. When you look at the bigger picture, Trump is talking about relief packages, possible rate cuts, new money entering risky markets, and a wave of new cash aimed at digital assets. Everything is falling into place at the same time that XRP is ready to be taken up by institutions. Plus, one more point of view that no one is bringing up. The circle may have started over in secret. A lot of people think the market is still down. What if the bear market is over, though? In 2017, 2020, and 2024, XRP was the last coin to run, 700% from December to January. We have been going down since January 2025. What if the market was going down? What if the new cycle starts now when ETFs start to trade? What if the 4-year cycle for any asset that has an ETF is dead because new money keeps coming in and changes the pattern? Look at how loud it is. Every day, even a small ETF makes tens of millions of dollars. Imagine that 6 ETFs were each making $20 million every day. Every day, that's $1.2 billion. It is so heavy that it breaks things and makes things move. People only look at the number on the map when they see that money is coming into an ETF. They look at how much the 18 million, 11 million, and 26 million are. But they don't think about how it will work mechanically. These ETFs don't just buy XRP once, they keep getting it. Every day, new money comes in. To keep up with those amounts, they have to keep adding. Since this is the case, I keep saying that the price structure changes as soon as we go past the 30 to 60-day mark with multiple ETFs running. You need to get this right in your mind. XRP is very liquid right now. Order books are steady and you can buy as much as you want. There is a lot of supply across exchanges. But things change a lot when more than one ETF comes out on the market. Imagine that every day 5 or 10 ETFs all pull money from the same pool at the same time. Not just a one-time thing, but a steady flow that keeps happening. Each ETF might start out slowly with only $20 million in daily trades. Even with that low number, 6 ETFs take $120 million out of the market every day. It's not a possibility, it's a likely outcome. And that's assuming that the bigger players like Franklin Templeton or Bitwise don't do better than Canary, which is very likely to happen. Larger ETFs may start out slowly, but their size and ability to reach people all over the world make it easy for them to take in tens of millions of XRP, breaking previous records for volume. There is constant pressure on liquidity every day, and it doesn't just eat away at the supply, it causes a structural squeeze. A repricing event is likely to happen when there isn't much supply and demand stays the same. The market can't stay calm once these flows line up. As the ETF-driven pull changes the whole XRP environment, the price will change quickly and dramatically to the upside. What happens when various pipelines take money 24 hours a day, 7 days a week? The number of items available decreases steadily until the price has to go up just to get people to sell. Market makers aren't able to make supply that doesn't exist. There's only so much thin liquidity that they can spread out over all exchanges. The market changes prices all at once at some point, and that's the event I keep talking about, the repricing. This is where things get really interesting when we put it into the bull/bear cycle pattern. It always goes like this. Bitcoin comes first, then Ethereum, then altcoins, and finally XRP. Since XRP came along, that trend has never broken. XRP is the last asset to blow up every time it runs. And XRP came in last again in 2024, December through January, the same as in 2017, the same as 2020. The cycle was over after that 700% rise. A lot of people didn't even see the connection. They thought the pump was just another one. They weren't able to see the pattern. When XRP goes up, it always means the end of the bull market. If someone says we're still in a bear market, it's because they didn't look at how the cycles work. They didn't get bigger. They didn't know that things have been slow since January 2025. Downward higher lows, lower highs, sideways buildup, a long reset phase. That's what a cooling phase after a market bull looks like every single time. This year, the market has been unwinding, restarting, and reloading itself. But here's the catch. The cycle can't go back to the old 4-year pattern now that ETFs are around. When you use ETFs, Your assets don't act like regular assets. The way they act is like establishment goods. The old patterns are broken by constant flows. There are no longer 4-year cycles of boom and bust. Instead, there are rolling waves of liquidity, constant pressure to accumulate, and repricing events that happen when supply runs low, not because of hype, but because of inflows. That's why XRP is in such a special place. It's no longer just another altcoin. Its supply is like a commodities, and its liquidity is like a settlement asset. Soon, a group of ETFs will come out that will suck up supply every day. This is not a hypothetical setting, it is a structure setting. Check out what's going on with just one live ETF. People think that since the price hasn't changed yet, nothing is wrong. It means that buildup is going on below the surface before the price changes. It always works that way in capital markets. Price goes down last and collection goes up first. Now think about this. The early effects will get stronger once the bigger ETFs start trading. It's possible for Franklin Templeton to move more books in one day than Canary did in 2 weeks. Bitwise has one of the most secure ETF delivery networks in the business. They ship goods all over the world. When they go live, that's not just demand in the US, it's demand from all over the world. A lot of people forget that ETFs let you get exposure to crypto without having to have a crypto trading account. Nothing. No wallet, no on-chain transaction, not even a key. Since anyone with a brokerage account can now tangentially own XRP, the market size is 50 times bigger than it is now. That's why the supply is so important. More people are interested in crypto than ever before, but there are fewer coins available than ever before. The over-the-counter, OTC tables, are another important issue that many people don't give enough thought to. Public platforms are not where institutions want to buy XRP. They want to buy in bulk. They want a steady flow. They want prices that they can count on. That's why they buy it over the counter. But over-the-counter tables can only hold so much. They are empty. Order books are the only source of prices after ETFs drain OTC. This is when repricing goes through the roof, because there won't be a steady supply then. The books aren't very thick. Let's bring Bitcoin back into this because the way Bitcoin is set up actually makes the way XRP is set up stronger. For newcomers, Bitcoin's death cross formation looks scary, but in the past, it's been one of the most positive signs after the initial dip. After Bitcoin ends a death cross dip, there is always a huge move, as low as 70% and as high as almost 200% in some cases. And when Bitcoin goes up in value, a crazy amount of money flows into altcoins. This time, the spillover goes into a market where XRP will have more than one ETF taking in stock, which is not normal. That wasn't how cycles worked in the past. This environment is very different from the last one. ETFs hold on to liquidity, so it doesn't move into altcoins and then disappear. They close it. They don't sell when stores do. They don't get scared. So let's say Bitcoin starts a 70% rise. Let's say that liquidity spreads among altcoins. More supply is put on XRP, which was already under a lot of pressure. That's how repricing events that are deadly happen. There is more than one thing. 5 things are piling up at the same time. Add to that the fact that global conditions are changing. Rate cuts are still possible. Stimulus checks are being talked about. Government spending is going up. The market loves cash. Liquidity makes markets go crazy. This time is almost perfectly lined. Spike in the economy. Money ease up, taking in ETFs. Bitcoin gets bigger, something that comes to an end. Let's talk about something that has been forgotten for a long time. Setting the psychological scene. When everyone is happy, markets don't go crazy. They go off when everyone is asleep, bored, or not paying attention. Take a look around now. The mood is dead. Low level of engagement. Most small players shut down. That's the exact situation that comes before the biggest moves in XRP every single cycle. Before it went up 1,000% in a few weeks in 2017, no one talked about XRP. No one cared about XRP in 2020 until it all of a sudden went down. The same thing will happen in 2024 when people stop watching. That's always been the case. The same thing is happening with this cycle now. That is, except this time there is plumbing in the building. Stocks are being pulled this time by ETFs. There are structural factors at play this time instead of social ones. That gives you a whole new kind of move when you line it all up. You get a move that doesn't whisper, it bursts. We should learn more about the supply system since it might be the most important part. XRP has one of the best liquid floats of all the top cryptocurrencies. The real liquid supply is very low once escrows, over-the-counter, OTC allocations, long-term holders, and institutional inventory are taken out. And that small amount of tradable assets is exactly what ETFs aim for first. They don't go after escrow. They are not after locked slots. They don't go after goods that can't be reached. They want to float. They go for things that can be bought right away. You can feel the stress already. The prices at OTC desks have gone up. Exchanges have smaller areas of liquidity. This is with one live ETF. Over the next year, increase that by 5, then by 10, and finally by 20. Supply doesn't just get tighter, it goes away at some point, and markets don't go up when there's no supply, they jump up. When people think about how quickly stories can change when liquidity, structure, and regulated pathways all come together at the same time, they get stuck at the next part of the talk. People who say that XRP can't move because ETFs don't buy the underlying are wrong because they think the market acts automatically instead of naturally. It's not enough to just buy units on the open market to have demand. Demand is also the anticipation of structural flows, the repricing of future expectations, and the mental reset that happens when an asset is suddenly seen as a result of institutions instead of someone who is just there to speculate. That's one of the most important changes ETFs make. They make a new kind of authority. And when an item changes categories, people value it in a new way. Institutions start to model it in a different way. Traders take different positions. Retail even starts to see it in a different way. Most people don't realize how much that shift can move. To make a long story short, ETFs completely change the way XRP works. They don't just give buyers something new to buy. They change everything that is connected to the item. To begin, they change the flows. Instead of random, fragmented buying on exchanges, ETFs create steady, reliable demand. The way the market works has to change because of this steady absorption of supply. Second, they change how people see things. When an asset has a big institutional product, investors see it right away as trustworthy, stable, and important. Everything changes, from how analysts talk about it to how the media tells the story. People who may not have paid much attention to XRP before third are now looking at it differently. ETFs change the way the market is framed. There are now regulated, institution-ready liquidity routes in place so that price action is not dominated by retail hype and speculation. Most importantly, ETFs make it easier to be exposed. Now, investors don't need complicated wallets, experience with the blockchain, or a lot of crypto understanding. The same steps can be taken to buy, watch, allocate, manage risk, and show committees XRP exposure as with any other stock or bond. This lets in huge amounts of money that have never touched the object before. Wall Street is often hesitant because of rules, public opinion, and private approvals. No, not from the thing itself. ETFs get rid of those problems almost right away, making a way for new money to keep coming in. What people mean when they say online that XRP will reach trillions because of ETFs is that the markets are so big. XRP could work with once the legal barriers are taken away. It's a different argument if someone thinks that scale is reasonable or not. Their idea for a system isn't as crazy as it sounds, though. They are talking about an asset that is focused on settlement and can connect to global liquidity lines, banks, treasuries, corporations, infrastructure payments, and tokenized value flows. It can also be used by individuals and institutions and comes in a regulated, brokerage-friendly package. That's the point where they're excited about coming together. This is not advice about money. Let's move on to something even more important, the idea of structural triggers happening at the same time. Markets don't go crazy for one reason. As they move in groups, different forces build on top of each other until the pressure can't be stopped. This is exactly what's happening with XRP right now, and users need to know about it. An ETF launch is strong on its own, but it's only one part of a bigger chain of events that cause prices to rise. When regulatory frameworks are made clear, trust rises among both institutional and individual investors. When you add liquidity growth, where daily flows and inflows constantly lower the supply that is available, you can start to see the building blocks for a big move. Then add institutional onboarding, which lets banks, hedge funds, and big funds get in through regulated channels. This makes supply even tighter and demand even higher. Besides that, combining tokenized assets, real-time settlement pathways, and new banking rails makes a base that supports long-term growth and starts an adoption loop that feeds itself. Price changes that are very big never start with a single spark. They happen when all of these ignition points line up properly, firing one after the other and making the others stronger. This is the structure that gets XRP ready for the kind of price change that changes the market. Because of this, I keep saying that knowing how ETFs work changes everything you think you know about what to expect. Every big asset that has ever been turned into an ETF has gone through the same three-stage process, and this includes their infrastructure, pipelines, and on-ramps. A change in how people think about it, a time of repricing, and then long-term inclusion in mainstream portfolios. The pattern stays the same, even though the timing and size change. When an object goes through that cycle, it doesn't go back to where it came from, which leads to something that is missed. Liquidity leads to more liquidity. The liquidity profile of an asset automatically gets better when it is easier to get to, easier to assign to, and easier to include in diversified strategies. Market makers make gaps narrower. Institutions are more willing to be exposed. Analysts start to model it. The financial media start to take it more seriously.